Good evening, everyone. Time for this week's silver update. This is the 4-hour chart of silver provided by netdania.com. You can click on the link below. Drawn in a couple of lines here. The first one is the primary trend line, downtrend line, drawn from the 37.50 top. And the other line here is going to be the $30 support resistance line. And we've also got the MACD down below. Now, if we look up here at the primary downtrend line, you can see that we're attempting to rally back to it. A penetration of it at the rate we're at would actually be below $30. So we can possibly get through it if we get to 29.50 would be my guess. We're going to move over to the right some because of the weekend market. So we're looking at 29.50 is probably going to be a penetration of that. The big thing to get through price-wise on the upside is going to be the $30 mark. You can see it's a very important price. It was a takeoff of the rally here. It amounted to a breakdown area here. And of course, once the breakdown recovered and we got back to it, it became a breakout point here. And you can see how strongly we broke out. So $30 is a very key number. We'll be watching that very closely if we approach it here on this rally. The other important thing to note here is this rise in the MACD. We may get a rally up, something similar, a crossover such as this, and you can see that that crossover in the MACD at that time resulted in the rally from 26 to 37.25, 37.50. So $11.50 rally on that crossover of the MACD. You can see we haven't really had one except this one, which turned out to be a fake out and then a crash. So we're watching that very closely, and it could be a bottom. My prediction was there was a fairly decent chance, based on the size of the spike here, that this is going to be some type of bottom, and that we'll probably get through 30 and maybe even higher before we roll down and test. So we're going to watch that next week. On to the question, actually it's going to be questions of the day, and there's actually quite a few here in this one post, but they're very good ones, so I wanted to read it. This is from Marcos Cheeto, or Cheeto, and it's about market manipulation. He says, "Hello, Brother John F. I'm a noob and comes to silver. I recently ran into an article which had some questions in the end of the article. I myself cannot answer them, although I'm very curious, so I thought I would ask you. Here are the questions from the article and the link to it at the end. I greatly appreciate everything you do. Thanks. P.S. I apologize if this has been answered before. If you could point me in the direction, thanks. Question. Why do these banks, JP Morgan, give a darn in the first place what the price of the metals might be? The only reason that makes any sense is that they are acting as proxies for the U.S. Treasury. The Treasury doesn't go into the markets itself, but does it direct a commercial bank to act for it to buy or sell gold? It might, but there's zero proof of any sort of it's doing that. These banks have no dog in the fight. They couldn't care less what the metals prices are and have no reason to try manipulating the market. Well, not exactly. I agree that it's probably the government that's behind JP Morgan. I think, the silver short has been passed from a number of people. It's gone, before it was Bear Stearns, it was someone else. And so there's a large number of people that have been involved in that silver short. Now, I don't think that just as JP Morgan or the others don't just willy-nilly short any commodity out there, I don't think there's something special about silver that's going to make them short it because they see it as being a real profitable short. But given a situation where the government has given the green light to short it, and they've made it clear that it's in their interest for it to be shorted, then obviously that's going to be a strong incentive for banks to do so, considering that they have a government backing them that gives them easy profits. And we'll see on one of the questions below how they do that. Now, the other thing is that I don't think it's totally outside of JP Morgan's interest or any bank's interest to keep silver from becoming remonetized, because these banks are involved in pushing paper currencies. So they're fully subscribed to the fiat currency model, so it makes sense that it is in their interest in a larger sort of way to keep precious metals from returning as money. Question: why has there been zero word from their traders about how stupid their bosses are for fighting a gigantic 10-year bull market? These guys all know each other and they gossip with the same delight as teenage girls. It's hard to keep a long-term illegal collusion a secret. Two parties might possibly be able to keep a secret, but 6 or 8 commercial banks acting in broad daylight. It's said that 3 individuals can keep a secret, but only if 2 of them are dead. But for a half dozen trading operations to do so, Wall Street is the world's greatest rumor mill, but there's never been a rumor outside of those created in conspiracy circles who offer no sources that the bullion banks are acting in concert or individually as agents of Timmy Geithner. Well, that's wrong on in a number of ways. First of all, Andrew Maguire was a whistleblower who came forward about the manipulation. Secondly, this is often cited as a way of debunking various conspiracies, whether it's the Kennedy assassination, or you can name whatever you want, but this is one of the ones that is always used, and it's just simply not true. Let me give you some examples. The Manhattan Project was a very large project that the U.S. government undertook, and it went for a number of years, and it was kept totally secret. Another example, the Gulf of Tonkin. We all know now that the Gulf of Tonkin was a staged false flag event for the war, and there was obviously a very large number of people who knew about it, and they never exposed it during its time. So there actually are many, many instances of conspiracies of silence by large groups of people, and you'll see that in secret societies as well, who take oaths to not betray the secrecy. So I simply can't agree with that. I think that history shows that there have been conspiracies of silence. Now, this idea that the traders would not come out. Now, we mentioned Andrew Maguire, and I was going to make another point on that one, but it slipped me. So let's go to the next question. If, as alleged, these banks have been short gold from the bottom, or the gold bear market at 225 in 2001 and silver bear market at 425 also in 2001, how can they possibly absorb tens or hundreds of billions of losses? Did they expect to take the metals to a fraction of their 71 lows? Trading desks make mistakes, but they don't stay short one of history's great bull markets. It's not the way traders earn bonuses. How stupid are the supposed not-for-profit sellers of gold supposed to be? Well, there's a reason why silver is called the devil's metal, and that's because of the volatility. All you have to do is look at the chart. We'll pull up the weekly, and you can see there's a lot of volatility there. You can go on to the daily. So you can see we had a big downdraft here, then a rise, then a downdraft, another rise, down. So there's plenty of opportunities there for making a lot of money. Now, if you're consistently short, you're always short, you're never switching to long, yes, you would have been destroyed by this bull market. But that's not what they've done. They have gone in and out of the market. They've crushed the market and then covered. they've gone long certain positions and then gotten out and then crushed it again. So they're trading in and out of the market. They're not staying short a rising market the entire time. So they're trading around their position, and they're also backstopped by the Fed. So they have a real way of making money with this. Question: exactly where and how do they supposedly get the capital to cover these losses? Haven't they ever heard the old saw, he who sells what isn't his must buy it back or go to prison? No bank can tie up billions in capital fighting the market for a decade. Well, we've already answered that. They're not really losing money, but even so, even when they do, they're obviously backstopped by the Fed and the Feds. So that's really a non-issue. Exactly who originated this idea of trying to suppress prices using the futures markets? Here, a well-known writer on the subject suggests the following to me via an email. The big commercial started some 25 years ago, discovered they could dominate the market and force technical traders in and out of the market when they wished at great profits to the commercials, but they miscalculated and stayed in too long. Now they're trapped. I don't buy that explanation for several reasons. Of course, the big guys like commercials are always bullying small speculators. The small guys use technical trading systems which make it easy to figure out where they're buying and selling. Small traders are always minutes behind the market, and small traders usually use way too much margin, so they're prone to being squeezed and panicked. This has always been true, not just for the last 25 years. It's part of why small traders are notorious for losing. Commercials are typically on the other side of the trade. But one thing is for certain, nobody, certainly not the commercials, allows himself to get in so deep he's trapped for 12 years in one of history's greatest bull markets. Well, I personally don't think they're trapped. I think that they could get out of their position fairly quickly, but I don't believe they're interested in doing that. They're interested in suppressing the price as long as they possibly can, and then I think when it starts to get away from them, they will flip and go long, or at least be neutral on it. So I think that answers that question. I don't really think that's happening. Next question: why fight the market and get trapped in just gold and silver? Why aren't they trying to suppress copper, platinum, palladium as well, for that matter, every commodity? I don't credit the people who run central banks or national treasuries with a great deal of financial acumen. They're basically just political hacks, flunkies that went to good schools, dress well, and like feeling important in a safe niche in the bureaucracy, but they don't want to lose their jobs by being wrong for that long. Well, the first question is about copper, platinum, palladium. Well, palladium and platinum have never been money, so they don't need to be demonetized. Secondly, they're probably just too rare to be money. Platinum, palladium, they're actually in the same metal group, and there's a couple of others in that group, but they're just not, they don't have the qualities it takes to be money. Copper does, and copper has been money for many, many centuries, and it is not going to be money much longer, even though what copper there is left that is money has pretty much been removed in 1982, starting in 82 and any years following that, the pennies were made out of zinc with copper coating, so copper had been demonetized in that sense. But copper is probably good for small change money, but it's not money in the same sense the gold and silver are money. There's just too much copper out there. So platinum, palladium, and copper, they just really don't meet the criterion for being good money in a system, and they haven't historically been so. Copper's come in occasionally, but there have been other systems where there's just the silver. Why would the U.S. Treasury, if it's behind a gold suppression scheme, make things easier for the Chinese, the Russians, the Indians, and numerous other developing countries by suppressing the gold price? They simply take advantage of the lower price to buy more. The arguments for suppression of gold make very little sense when you examine them. The arguments for silver make absolutely no sense at all. It's a tiny market that nobody cares about except silver fanatics who treat it like a religious icon. That said, I'm at least as bullish on silver as gold, but a discussion of that will have to wait. If anyone can answer these questions, I'd appreciate it, etc. So, Why is the Treasury making it easier for the Russians and the Chinese to accumulate gold? Well, that's not their intention. But if you suppress a price, that means, of anything, that means people buying it are getting whatever they're getting below cost. So that's just a side effect of that. I'm sure that's not their intent. The Russians, Chinese, and Indians do seem to be moving away from the U.S. sphere of influence. Now, if we didn't suppress the price of gold and silver, I think it would probably flow even more quickly to those countries, China, Russia, and India, than it does now, because there would be a huge rush into it. It would become a fantastic rising bull market. Everyone would take notice, and there would probably be a panic once people realized that there just isn't enough silver out there for them to buy. So now the next one was that the silver market is too tiny, therefore it makes no sense to suppress it. Actually, that's exactly the opposite. It makes perfect sense to suppress it. What's hard to suppress is a very, very large market, because there are many, many players who are involved in the supply as well as the demand. It makes it very, very difficult to cause any kind of corner or any kind of squeeze, because there's just so much supply out there and there's so many buyers and so many sellers. But silver is actually perfect for that, because it's a tiny market and nearly all the silver is gone, and they have locked it up in these paper trading contracts. So silver is actually the perfect metal for manipulation. Hope that answered those questions to your satisfaction. The last thing I wanted to go to real quickly is the silver stock report. This is from Jason Hommel. This just came out, and it's very interesting anecdotal evidence. Jason has run his own coin shop for the last few years, and you can see by the numbers here. I had no idea he's actually done quite a bit of business. And so he says, people who are ready to buy silver and gold often ask, which should I buy and what's the most popular? It's the 1-ounce silver round. It's the clear winner. The sales volume data show what's popular and by how much. To my knowledge, no other bullion dealer has published such data ever. Thus, it is very important industry data. It should be linked and discussed and cross-referenced by those who would comment on the physical bullion market. The data reveals much. One of my favorite points is that it exposes a lot of fraud. Don't ever believe it when fraudsters who vault your bullion in the form of 1,000-ounce bars claim that 1-ounce rounds are not popular, or that it's too difficult or too costly to manufacture these popular silver products. Note the data covers a period from August 2010 to April 2012, which is 1.75 years, or a year and 9 months. We sold a total of $33.9 million and bought a total of $13 million worth of silver and gold from the public. We have excluded purchases from wholesalers or sales to refiners, which would have offset the difference and would have helped to balance the numbers. So the numbers reflect what the public is buying and selling and doing and choosing not to do, not what dealers buy or sell or have to do to serve public demand. Overall, it's important to note that silver 1-ounce rounds are the most popular item both in sales and purchases. Since they are the most popular of purchases as well, this says that silver 1-ounce rounds were the most popular item of the last 10 to 20 years. Since sales of silver 1-ounce rounds were 23.6% of all sales and the purchases were 11.6% of all purchases, this says that they're only growing in popularity. We didn't sell twice as many as we bought. We really sold $8 million worth of 1-ounce rounds while we bought $1.5 million, which is a 5.3 times more ratio. To me, that suggests that 1-ounce rounds are 5.3 times more popular now over the last 2 years than they were historically. Every now and then people will sell the 100-ounce bars or sell gold coins just to convert them into 1-ounce rounds, as people are growing in their awareness of the need to have fungible, popular, barterable unit of trading precious metal. I believe this is a good trend. It shows the growing awareness of the importance of fungibility and is helping the silver 1-ounce round to gain that fungibility that comes with being the most common unit of trade. The sales data is showing that silver 1-ounce rounds are becoming money. So I'll leave it there. I'm going to put the link on here. You can go and look at Jason's data. It's at the very top there, and very interesting article. He's confirming what we've heard from many others, that silver is more popular than gold. The 1-ounce rounds are extremely popular, and I believe that silver is becoming money, just as Jason stated. It's slowly being remonetized, not in the sense of a currency to transact with, but in the sense of one of the important senses of money, qualities of money, is a store of value. Silver is returning as money in being a store of value, and more and more people are catching on every day. Now, over to the blog. I just want to thank everyone who has donated. There is a donate link via PayPal, and I appreciate everyone who's donated. Believe it or not, the $5 donations or just a few bucks or whatever, they do make a difference. There are some costs in running the blog and the channel, and they're not major costs, but there are some costs. Appreciate all the people who have supported the advertisers. I'm probably going to do a changeover to a new theme here because of problems with the advertisers, so be prepared for that. But again, I just want to thank all the people who have donated and supported the channel. I really appreciate it. So finally, the silver chart. We pretty much are rallying off this spike bottom. It's not to the extent of this one, and the next one wasn't quite to that extent either, and this one is a little bit weaker as well. But we may get that rally up above 30, and of course we're still building this gigantic pennant formation, and it's huge. It's one of the biggest in history, and my expectation is that at some point this pennant is going to break to the upside, and that's going to mean a substantial rally, probably into new highs when we take out the $50 price. And we'll talk to you next time.